In the financial world, everyone asks, why can't I make money? But nobody asks themselves, how often do I win? This simple shift in questioning changes the entire game completely. People think their problems are lack of capital, market knowledge, or not having the right strategy. But the truth is deeper and more painful. The real problem is you. More precisely, your emotions. Fear and greed, these two ancient forces have destroyed and continue to destroy millions of people in financial markets. Fear forces you to miss perfect opportunities, while greed drives you to take risks that will destroy you. The human brain was formed millions of years ago to survive in dangerous forests, but it is completely useless for making decisions in modern financial markets. I'm not offering you ways to make money, secret strategies, or get rich quick schemes. These are all false rumors that take you deeper into trouble. I'm showing you a completely new operating system, a way of thinking, a philosophy, a decision-making system with quantum logic. This is a unique path that transforms the traditional emotional approach into mathematical logic. Here, money is not a goal or a score. It is simply a tool, a system of numbers, a measurable and manageable mechanism. This approach completely cleanses investment from psychological burden and transforms it into a scientific process, a laboratory experiment. You no longer hope, believe, or assume. Instead, you calculate, measure, and execute. The foundation of this system is actually not difficult. On the contrary, it's very simple, but accepting it is very difficult. Our goal is not to accumulate great wealth, but to create a system. Because financial freedom has never depended on the volume of capital, it depends on statistical advantage and disciplined execution. You can have millions of dollars, but if you act without a system, this money will quickly disappear. Conversely, if you start with a small budget, with the right system and discipline, you can achieve financial freedom. The path I'm showing you teaches you to completely remove the human factor from your decisions. This means zero emotion discipline. You won't trade when you feel fear, nor when you feel excitement. You will simply follow your rules every time without exception, with mechanical precision. This approach is based on cold, harsh, and unwavering mathematical logic. There is no room for romance, intuition, or market feeling. You learn to think like an algorithm. Every decision is based on probabilities, every step on statistics, every result on mathematical expectations. People often think of financial markets as a battlefield, but this thinking is completely wrong. Financial markets are a casino, and you must make a decision. Do you want to be a gambler or a casino owner? The gambler believes in their luck, their fate, their hopes that this time will be different to win big once. They make emotional decisions, oscillate between hope and fear, and ultimately statistics destroys them. The casino owner, however, has a completely different mindset. They don't know if they'll win on any particular hand, and it doesn't matter. They simply have a small mathematical advantage, house edge, and they know very well that this advantage will definitely lead to success through millions of repetitions. The real difference is this: the gambler only looks at outcomes, the casino owner prioritizes continuity. The gambler thinks about this trade, the casino owner thinks about 1,000 trades, and you can see the difference between them. The gambler makes decisions with emotions, the casino owner makes decisions with numbers. And most importantly, the gambler plays not to lose, the casino owner knows the system will win. My system moves you into the second category. You will no longer ask, what can I do with the money in my hand? Instead, you will ask, what is my statistical advantage and how many times can I repeat it? This is a fundamental mental shift, and this shift changes everything. The power and reliability of the system is not in its simplicity, but in its consistency. This is not about getting rich overnight. This is a path that leads to lifelong financial freedom. Even historical data confirms this. The most successful traders and investors are not emotional geniuses, but disciplined individuals. They have learned to eliminate their feelings and fully trust the system. Let's understand this system more deeply. What is quantum logic and why is it so powerful in financial markets? Quantum logic is actually the practical application of probability theory and statistics. Every decision is a probability calculation. Every trade is a statistical experiment. Every result is a manifestation of the law of large numbers. This law says, in small samples, results may appear random, but in large samples, true probabilities reveal themselves. Meaning you can lose in 5 trades, but in 500 trades, your statistical advantage will definitely emerge. The problem is that most people give up on the system after 5 trades in disappointment. They don't allow the law of large numbers to work. Think about it, you flip a coin 10 times and get heads 8 times. Does this tell you the coin is crooked? No, this is simply the randomness of a small sample. But if you flip the coin 1,000 times, the result will be almost exactly 50% heads, 50% tails. Financial markets work the same way. If your strategy has a 55% success rate and you apply proper risk management, you may win and lose in the short term, but you will definitely make a profit over a long period if your strategy truly has statistical advantage. Now the critical question, what is statistical advantage and how do you obtain it? Statistical advantage means your average win is larger relative to your average loss, or your success rate is high enough compared to your failure rate that you profit in the long term. For example, you only risk 2% of your capital on each trade, but when you win, you gain 4%. This means that for every 2 successful trades, you compensate for the loss of 1 unsuccessful trade. And if your success rate is above 50%, you're already on the winning side. The problems arise here. People understand these calculations, but they can't apply them. Why? Because emotions destroy the calculations. Think about it. You made 5 consecutive unsuccessful trades. Mathematically, this is normal. Even with a 55% success rate, 5 or even 10 consecutive losses are completely possible. But alarm signals start appearing in your brain. You think to yourself, the strategy isn't working, something's wrong, I'm losing money. And here 2 things happen. Either you change the strategy or you skip the next signal out of fear. In both cases, you break the system and completely lose your statistical advantage. Or the opposite situation, you made 5 consecutive successful trades. Now you feel like a genius. Greed whispers to you, today is your lucky day, bet bigger. You break your risk management rules and put not 2% of your capital in the next trade, but 5 or 10%. And naturally, this trade is unsuccessful because no strategy has a 100% success rate. As a result, you lose more in 1 unsuccessful trade than you gained in 5 successful trades. Your statistical advantage is destroyed again, but this time because of greed. This is exactly why I tell you, the real enemy is not the market, it's yourself. Your emotions destroy your system and the solution is very simple, but implementing it is just as difficult. Turn off your emotions completely. You must learn to think like a robot. When your strategy gives a signal, you execute, regardless of whether you're successful or not, regardless of how you feel, regardless of what you think about the market, you simply execute. Because you know that each individual trade is insignificant. What matters is the statistical result of 100 or 1,000 trades. How do you achieve this mental shift? First step, redefine what money means to you. Erase the emotional burden of money. Money is not a score. Money is not a measure of your personal worth. Money is not magic that will make you happy. Money is simply a number. It's pixels on a computer. It's data in your account. You use statistical advantage to increase or decrease this data. Approach each trade with this mental framework. This is just one of the statistical experiments. What will the result be? I don't know. But I know the result of 1,000 experiments. My statistical advantage will take me to the winning side. Second step, accept risk management as absolute law. Risk management is not a recommendation. It's not a choice. The foundation of your system. Under no circumstances, for no reason, should you break your risk rules. Even the best opportunity should not drive you to violate the rules. Why? Because you cannot see the future. You cannot know this trade will be successful. And if you break the maximum risk by placing a large amount, 1 unsuccessful trade can remove you from the system. A momentary emotional decision can destroy everything you've earned over months or years. Risk management is your insurance. It protects you from large and fatal losses. It gives you the opportunity to stay in the game even when market conditions are difficult. Third step, focus on the process, not the outcome. This is the most difficult mental shift. We're always interested in results. What's this month's profit? Did this trade make money? Did my capital increase? But these are wrong thoughts. Here are the right questions. Did I apply my strategy correctly? Did I follow my risk rules? Did I make an emotional decision? If the answer to these 3 questions is positive, you were successful, even if that trade ended in loss. Because you executed the process correctly, and the process produces results in the long term. Fourth step, test and evolve, but within the system framework. This may sound contradictory, but it actually isn't. I said you must execute like a robot, but this doesn't mean you'll never change your system. You should change your system, but not based on emotional impulse, but based on statistical data. Let me give you an example and you'll see there are 2 traders. Both have the same strategy, the same statistical advantage. But the first trader risks 5% of their capital on each trade, the second risks 2%. Initially, the first person grows faster. They start earning more in a short time and feel more successful. But then the inevitable happens, a series of consecutive losses. After 5 consecutive unsuccessful trades, the first trader has lost 25% of their capital. They're now under psychological pressure. They doubt their strategy. They decide to change the system or take a break from trading. The second trader, after the same 5 unsuccessful trades, has only lost 10% of their capital. They don't lose themselves. They know very well this is a normal part of the game. They continue with their strategy and allow their statistical advantage to work. In the long term, the second trader is inevitably more successful because they stay in the game. They don't break their system during emotional breakdown moments. What does this teach you? Speed doesn't win, consistency does. Not big wins, but consistent small wins create wealth. Not risky maneuvers, but conservative and disciplined approach ensures longevity. In financial markets, staying is more important than winning big, because if you can't stay, no strategy works. Now let's talk about the compound effect. This is one of the most powerful weapons of the systematic approach. The compound effect says that if an investment consistently earns a certain percentage return, over time this return grows exponentially. Simple example, if you earn 20% per year, in 5 years your capital doesn't double 100%, it more than doubles, approximately 148%. In 10 years, it's more than 6 times. In 20 years, approximately 38 times. This is the power of compound effect. But this only works when you achieve consistent and stable returns. If you earn 100% one year and lose 50% the next year, the compound effect doesn't work. Instead, volatility destroys you. That's why my system says, don't target big wins, target consistent small wins, 15 to 20% per year, this consistently. And compound effect will turn this into fantastic numbers over time. What should you do after reading all this and deciding to follow this system? First, create a learning plan. Just reading these isn't enough. You must actively learn, create a plan. What topic will you learn each week? What books will you read? What courses will you follow? And most importantly, how will you apply it? Second, choose or create a strategy. You already know that strategy is your hypothesis about the market. There are thousands of strategies on the internet. Choose one or create your own. What matters, it must suit you. Third, define risk management rules. This goes without saying. Decide the maximum risk you'll take on each trade. Define what the maximum drawdown will be. And don't violate these rules under any circumstances. Fourth, create a trading journal. This will be the foundation of your evolution. Record every trade, details, emotions, results, analyze weekly. This is your objective mirror. Fifth, start small. Don't start immediately with large amounts. First, test the system with a small account or demo account. As your confidence grows and results are positive, increase capital. Sixth, be patient and continue. This is the most important step. The first months will be difficult. You'll experience losses. You'll doubt. You'll want to quit. But remember, every successful trader has gone through this path. Nobody was perfect from day one. The difference is that winners continued, losers quit. Now let's return to the most important point. The difference is, which side do you want to be on? On the gambler's side, swinging between hope and disappointment every day, believing in luck and fate, deceiving yourself by saying this time is different with each trade. Or on the casino owner's side, coldly and calmly watching statistics do its work, accepting every failure as a normal part of the game, seeing every success as data, not excitement. The decision is yours, but know this, the market decides every day, and it rewards the most disciplined, the most emotionless, the most systematic. Statistics forgives no one. The law of large numbers makes no exceptions. You either make these laws work for you or they work against you. There is no third option. So it's time to choose, be a gambler or a casino owner. Make decisions as a human or as an algorithm. Be a slave to your emotions or the master of statistics. The answer is clear, but implementing it, that's your journey. This journey won't be easy. There will be many obstacles along the way, but every obstacle will make you stronger. Every loss will make you wiser. Every success will give you more confidence. And one day, maybe after a year, maybe after 5 years, you'll look back and see how far you've come. You're no longer a prisoner of your emotions. You're no longer a person reacting to the market's random movements. You're a professional with a system. You're a strategist using statistical advantage. And most importantly, you're a financially free person. This is my promise to you. If you truly stay loyal to this system, if you work on your emotions, if you're disciplined, if you think long-term, success is inevitable. Maybe not quickly, maybe not as dramatic as you expected, but it will come because this is mathematics, this is statistics, and mathematics doesn't lie. My final words are these: financial markets offer you 2 paths. The first path, emotional, impulsive, hope-based, and ultimately losing. Most people choose this path because this path is familiar, seems natural, makes you feel human. The second path, rational, systematic, statistics-based, and ultimately winning. Few people choose this path because this path seems unnatural, difficult, makes you feel like a robot. But this is exactly the path that gives you financial freedom. This is exactly the path that gives you true control. This is exactly the path that works. The choice is yours. I've only shown you the way. Walking it is your responsibility. Good luck.